If you'd like to see more of our videos, please subscribe to our channel on YouTube. Good morning, traders. Welcome to today's market review. This is Fred Razak at CMtrading. Today is February 17th, 2020, and today is Monday morning, so no major economic events scheduled for today. And we're kind of in an interesting time right now, okay? Most of the economic data is already out, and some of the corporate earnings are not happening until next month. So we're in a very interesting kind of lulled time right now. But let's take a look at the markets. First, we're going to start out with the Forex symbols. The euro stays on its lows at that 108-ish level. We're going to take a look at that. And the question is which direction is the GBP headed? It had a nice rally last week. And we kind of mentioned that it may form this reverse head and shoulders. We're going to take a look at that. Now, looking at the indices, the Dow Jones pretty much unchanged, while the NASDAQ is still on its dead highs, okay? A couple of options there. Now, looking at the commodities, both gold and oil rally close to its upper limit for both of them, okay? Gold trading around 1586-ish level, and oil trading around 52, the high 52-ish area as well. Now, looking at the stocks, going into this week, we're still having a mixed bag. So the question is which direction the markets will go, considering that the coronavirus is somewhat contained, okay? They're not expecting it to be this massive thing that everybody, feared it will be. And we're seeing kind of like, that actually dissipate just a little bit, even though there are more cases, but it's not being the outrageous scare that everybody had anticipated. But let's take a look at the markets and see what we can expect from this week's trading. So we're starting here with the Euro USD at a 4-hour chart. You could see this is dead, okay? Dead as dead can be. 108.35-ish level, not really bouncing whatsoever. So, the question is whether or not we're going to get that bounce later today. If we look at a daily chart, lows for the year, and a weekly chart, we're right there. Okay, we're really still right there at that previous resistance, and this would be subsequent support, and I would expect it to actually bounce off of this level. But if we do breach it, then this can, like I said last week, this is like a rerun from last week, okay? It sounds like it. It could definitely get to this 105-ish level. So just be aware of it. Keep it on your radar, because as soon as it does break, then I do expect it to pick up some volume on the downside. Now, looking at the GBP, the exact opposite. Okay, we had a nice rally last week to 130.64-ish level, and then retraced around that area, okay, which is a choppy area for the GBP. Now, I mentioned it looked like that we're heading up this head and shoulder. That would be the head, this would be a shoulder, and possibly this would be the other shoulder. Okay, what I don't like about this is that we had this little thing here, which doesn't, really work out with a head and shoulder formation. Okay, so if it does fail this area, this 130.64, then I do expect it to go further down. Okay, so just keep that in mind. It could trade between this 129.84 and 103.38, which is about a 60 to 70 pip range altogether. Okay, but keep that in mind, as this is hitting a little bit of a snag after we had this nice rally last week. Now, jumping into the commodities, you could see pretty clearly that gold has been hitting this high of 1584 last week. Now it's trading at 1582, pairing up with some of its gains. But this was the upper limit, right? 1588 level, and the support limit was 1550. We were in this very tight range, okay, for quite some time right here. And then finally breaking at 1579 and using that as a subsequent support, okay? So if this does fail to rally, then I do expect it to retrace, okay, just like the others. But if it does continue this momentum, this was a move, this is the B move. So I do expect another move on the upside, okay? So that could actually frustrate. And let's see if we do get that as today actually continues trading. Now, jumping into oil, we're hitting resistance, 52.35. As I guess fears are kind of dissipating right now, as we're trading at 52.13, right shy of our resistance level at 52.35. So we are at that upper limit. Okay, so if we don't break above it, this may retrace back to its 50-ish level. Okay, it's a tight range, but nevertheless, it's decent. Looking at the Dow Jones, we're trading at 29,454 right now. Okay, this has always been a little bit of a point of contention. Every time we hit around this 455 or 29,500-ish level or 29,450-ish level, we always retrace. Okay, we hit a little bit of a snag. Now, I'd like to see follow through here. Okay, whereas the NASDAQ is dead on its highs, okay, or close to it. I mean, we're only about 10 points away from our highs in the futures trading right now. Okay, so with that said, if the stocks don't follow through, we may get that correction. Now, we're not there yet. We're not in March. Okay, March is a very big month for the Democratic primaries. Most of the consensus will kind of fall into who's going to be the runner-ups finally for the Democratic Party primary president-elect. And that's going to go into April, May, and then you're going to get your final, candidate. So with that said, okay, the next couple of weeks are going to be very, very important for the markets. Okay, if we don't break out higher, then we may see ourselves correcting itself because we are going into the latter part or the more important part of the election year, okay, in case Donald Trump doesn't get reelected. Now, looking at Apple, it's the same story. We're close to our highs, but we're not breaking out higher. Amazon, that is actually Facebook, 213, close to our highs, but not breaking out higher. Amazon, there we go, 2131, okay, close to our highs, but retracing about 49 points. Google, same story, 1515. JP Morgan, okay, not as strong, obviously. It's a different sector. But ultimately, if the stocks don't break out higher, I do expect somewhat of a retracement. But again, you got to keep an eye on the stocks. It's the FANG stocks. It's the rotational FANG stocks, the Microsoft, the Apples, the Facebooks, to see that they're actually following through. And if they do follow through, then I expect the rest of the market to actually catch up and maybe even hit 30,000. Okay, you heard it from me first. This is Fred Razak. I want to wish everybody a great trading day. Thank you.